India SME Investment Fund leads the round with participation from 20 other investors. The fundraise values the firm at $48 million.
Health tech startup Cent backs $5 million in its seed funding round from One Flow Holdings and South Park Commons. They will use the funds to strengthen the AI-driven early disease detection platform in India.
Karnataka becomes the first state to ban social media for children under the age of 16. The state CM says the move is to prevent the adverse effects of increasing mobile usage on children. Proposal comes amid rising concerns about excessive screen time, declining academic focus, behavioral changes, and mental health challenges among teenagers.
And Anthropic plans to take the Pentagon to court after becoming the first U.S. company to be labeled a supply chain risk. This comes after negotiations broke down and the U.S. Department of War signed a new contract with Anthropic's rival OpenAI. In what's growing today, Captain Fresh, a Bengaluru-born packaged seafood company, has just closed one of the largest cross-border acquisitions for a young startup in India, acquiring Frime S.A.U, which is Spain's leading sustainable tuna processor and distributor, a 49-year-old legacy brand with revenues exceeding 180 million euros and operations spanning 33 countries. With this, Captain Fresh is going to both expand its multi-species portfolio and also secure a massive processing stronghold in Europe. For more on the significance of this deal, joining me now are Uttam Gowda, who's the CMD and Group CEO of Captain Fresh, as well as Salvador Raman Mateo, who's the chairman of Frime. Gentlemen, thank you so much for being with us here today on CNBC TV 18. And Uttam, let me start with you. Tell us, very briefly about the strategic rationale behind the acquisition and how Frime fits into your playbook and the synergies you expect to see in the near term.
Thanks so much for having me. So Captain Fresh, we started in India, and initially we built a bunch of technology tools for various stakeholders in the entire value chain. And eventually then we started looking at distribution. The first set of distribution infrastructure that we built was in the US, where we focused on very luxury fine dining restaurants. So we bought a company called Sensi. That's how we got our entry into the US. And on top of that, we backed it up with a couple of acquisitions in the US. In Europe, we have been focused on prepared meal segment, the meal kits, the ready-to-eat, ready-to-cook segment, which goes into the retail category. Prior to this, we had closed acquisitions in the Western Europe and Central Eastern Europe. The Southern Europe, particularly the Spanish market, was extremely exciting for us, because if you zoom out and look at seafood evolution, there are a couple of civilizations that have been extremely intimate when it comes to seafood in their cuisines. Mediterranean is one of them. Iberia is very, very critical from a seafood consumption standpoint. So we have been looking out for partners, brands that we could double down on. And Frime was a perfect fit for us. It's a brand which has more than 40, almost 50 years of legacy. So it fits into the Mediterranean cuisine and seafood. So that's what got us excited.
Well, Salvador, your father's built Frime into this nearly 50-year-old institution, 20% of Europe's yellowfin market, and you're now taking it global with Captain Fresh. From here, what is the growth ambition for Frime specifically? Revenue, geographies, categories in the next 5 years that this deal will make possible for you?
Yeah, as you see, good morning from Barcelona. As you say, we are the leader in tuna portions in Europe. Right now, we are serving more than 30-something countries in Europe. And now with the entry of Captain Fresh in the group, we will start to move our products in the United States. We have some experience there, but with Captain Fresh, it can be more easy and more fast than we are doing usually. And also other markets like in Africa or like in Asia. We think in the big group Captain Fresh, we have the possibility to grow very fast. For the next 4 or 5 years, we hope to double or triple the total invoice that we are doing now.
Interesting there. Salvador, just one clarification. I read that you invested 50 million euros in Barcelona facilities, and then immediately after that, you had this acquisition from Captain Fresh. Was that capital raised with the deal already in mind, or was the investment a condition of the deal, or just coincidence?
No, just coincidence. We built a factory. It's one of the most modern and one of the most technical factories, fish factories in the world. And we built that in order to grow for the next years. And this is a casualty, or we don't know, or maybe the karma, that we met Utham 2 years ago. And from the first time, we know we are one with each other. We have a very good connection. And it's not the cause of the funds. We have the funds, we build the factories, and now with the Captain Fresh, we have the power to improve our production to other markets.
Uttam, this strategic flywheel you're referring to in your press release, Frime's tuna into your US network, your shrimp and salmon deeper in Southern Europe, it means you're asking the existing customers to buy more from one relationship. How quickly are buyers actually willing to consolidate like that? And where are you seeing it happen first?
So we have seen that in the past, wherein in our early acquisition, we have already grown more than 40% from the time we acquired. So the rationale behind acquisition is to acquire customers. And typically when we acquire customers, the brands that we acquire are experts in dealing with one or two products. As a platform, we have expertise in dealing with more than 10, 15, 20 products. And we have seen post-acquisition in our own portfolio today, where we have been able to expand the wallet share. And for customers, it's one-stop shop as a solution. And that's the solution that they're looking for, because seafood is an extremely fragmented market, a huge number of suppliers. So it's a very messy purchase affair for a global customer. So we are able to bridge that experience gap by being a one-stop solution and a very credible solution at it.
Got that. Salvador, I just wanted to ask you, since you're a 5-decade-old company, how do you think about preserving the culture, the craftsmanship, and the standards that made the company what it is, especially as you look to now scale significantly with this acquisition?
Yeah, one of the most important things that we have in our culture, it's a family business. You must know in Europe, in Barcelona, we have a tradition of more than 2,000 years in the tuna industry. And when we met Utham and when we start to meet the people that the companies that the Captain Fresh are acquiring, we see the same culture that we have, they have also in Poland, in the United States. The people that come from Captain Fresh, it's a startup, but they have a long tradition in family business, and they understand how the family business work in the fish industry, and that is very important for us. It will be very, very easy to have this culture from the next years in this group.
All right, Salvador and Uttam, we wish you the very best with this acquisition, and we will wait to see how this plays out. And we wish you both a very happy weekend. Thanks very much.
Thank you so much. Thank you.
And moving on Investor Eye, India's startup ecosystem is increasingly attracting global pools of capital, and private credit is emerging as a powerful financing alternative for founders looking to scale without diluting equity. In a significant milestone for India's investment landscape, venture debt platform Stride Ventures has secured backing from Public Investment Fund, one of the world's largest and most influential sovereign investors. Founded in 2019, Stride has enabled over $1.6 billion in credit across nearly 200 companies, including several unicorns, and now operates across India, the GCC, and Europe. So what does this partnership signal for the evolution of India-born investment platforms and the growing role of venture debt in funding startups? I'm now joined by Farah Ansari Javed, the partner at Stride Ventures, to talk about the opportunity ahead. Farah, thank you so much for joining me on the show today. Stride Ventures has become the first Indian-headquartered fund to be backed by Saudi Arabia's sovereign wealth fund, Public Investment Fund, right? So what does this partnership signal about the global credibility and maturity of India-born investment platforms?
Thank you, first of all, for having me, Arundhati. Really appreciate it. Like you said, Stride is one of the leading and largest, lenders to the startup ecosystem in India. We have a proven track record in India, and that's something that's being recognized globally, specifically by the sovereign investors. So previously we used to raise in India for India, but now we're increasingly seeing a lot more allocation from sovereigns, from asset managers, and from insurance companies, etc. And it really it goes to show two things. One, which is the right to win for India-born, India first sort of venture debt and private credit funds that are expanding globally. And the other is an attribute to the asset class, because for the longest time, private credit has been misunderstood. But when it comes to a lot of these global sovereigns, they're very sophisticated. There's been a lot of governance and due diligence that went into this. And we're really excited about this. So we're looking forward to it. Stride has expanded globally. So we are homegrown from India, but we've expanded across GCC, the UK, Europe, and we're expanding a lot more. This particular fund is also going to invest a sizable, close to $500 million in the GCC, which we're looking forward to. We have a ready playbook in India, and so it's a lot of copy paste that we are looking forward to doing in other markets.
Wow.
We see a lot of our startups go from India global, so we're now seeing a lot of the funds doing the same.
Absolutely. And you've sort of enabled over $1.6 billion in credit access across nearly 200 companies, right? And you sort of operate 7 funds across multiple currencies. How has your AUM sort of evolved since inception, and what does the next phase of capital deployment look like?
No, absolutely. It's just heating up, and it's getting a lot more. If you look globally across the private credit landscape in general, private equity has always been on the forefront, and private credit and growth credit and venture debt has just been sort of playing catch up, but it's heating up for sure. We're looking at $1 billion that we want to deploy within the next 2 years across our funds. You're right. We have 7 funds, which we're really proud of, and an incredible track record. So 2 of our funds have already retired, and that's the beauty of these credit funds. They're 4 years, and they provide a lot of non-dilutive capital to founders. We're hyper founder first, and so we see a huge shift in founder mindset as well. Previously, everyone was, just raising equity, but now with the founders thinking more about non-dilutive capital for acquisition, operating expenses, we see a lot more aptitude towards debt, and it's a growing asset class both in India as well as global. So to answer your question, the AUM will naturally increase across us as well as other firms in the same segment.
Absolutely. And from an investor standpoint, right, which sectors are seeing the strongest demand for venture debt right now? And what would you describe as your biggest conviction bets across the portfolio today?
No, absolutely. So we've always been sector and stage agnostic, but retrospectively, when we've looked at our portfolio, there are 3 large sectors that have emerged. That's consumer, because that's the nature of the consumer story in India, consumer fintech, and a lot of climate. Climate is very close to our heart and our vision at Stride, not just domestically but globally as well. And those are the sectors that we have backed. Almost everyone in India has definitely interacted with one of our portfolio companies, whether it's Zepto or Sugar Cosmetics or Ola Ether. So we're really proud of that. We have close to 200 companies, 20 unicorns, and we're actually really proud of the way that the different sectors are evolving in India. But generally, these are the sectors that we are most bullish on as well. The sectors
most
that
bullish on. And with these funds that you've sort of got, right, the backing that you've received, how are you going to sort of deploy that money across the years?
No, of course. There's always a need. If you see the news, Stride has been the most active investor with 121 investments in 2025 alone. That's 10 investments every single month. So we have a long list, pipeline list. We see a lot of exceptional companies that are in need of non-dilutive credit for working capital, for OPEX, for acquisitions, and even a lot of pre-IPO companies as well, where the founders want to increase their sort of stake in certain situations. And so we are bullish on that. That's the one that we are really growing on.
Absolutely. And Fariha, we're running out of time, but if you could quickly tell us in 30 seconds, AI is attracting a disproportionate share of global capital today, right? From an investor's lens, how are you sort of evaluating AI startups, and are you seeing stronger demand for venture debt from AI-led companies?
Yeah, so we definitely see AI, but it's not a disruptor in the industry. It's an enabler. We're seeing a lot of use cases where AI is being used by these companies for traffic management or credit worthiness or bank statement analysis. We ourselves use it for productivity and for portfolio monitoring as well. So AI is helping companies to do more with less. And it's an enablement. So we are investing in a lot of these companies that have used AI, not as an experiment, but as a valid use case. So that's the way that we look at AI. And there's a lot more to come where AI is concerned with the penetration across businesses and use cases. But yeah, it's not just
looking at companies that are using AI to make their work more efficient. Faria, thank you so much for taking time out and being here with us on Startup Street, and we wish you all the best.
Thank you. Likewise.
All right, we have to take a short break on that note. But up next, Founders Forum Group calls India's startup market one of scale and innovation. They call AI a generation shift and not a bubble. A conversation's lined up with them on the other side.
Welcome back. You're still with us on Startup Street. The focus is now shifted to profitability, and that's the word coming in from Carolyn Dawson, the CEO of Founders Forum Group. In a conversation with CNBC TV 18's Madiha Mujawar, she added that India's startup market was one of scale and innovation. Speaking about the big AI disruption, Carolyn called it a generational shift and not a bubble. Take a look.
I think that investors are perhaps seeing some great returns, and so therefore there is more equality to the conversation. Perhaps it's not just only on the investor terms. I think founders have also, there's a sense of maturity around both what they need and what they're asking for, and not only the sense of capital but also the advice on what they should do for scaling their businesses. So I don't know if it's an entire one-way shift or the other, but there's definitely the value exchange between the relationship is far more clearer now in the marketplace.
Okay, so what is the founder of 2026 doing differently than 2021? Is he focused more on profitability, governance, capital efficiency? What is it that they're focusing on?
I don't know that there's been a fundamental shift, because ultimately founders at the core have to have the resilience and have to have the fundamental belief that what they're building has the endurance and capability to be something amazing and to see that distance as well. I think there has been a shift around profitability. So there's been no doubt in the last few years that fundamental shift has been, the pressure has been on them to deliver the returns, to focus on profitability, to focus on that growth mechanism. But that's probably what I would say has been the shift and focus, but not a huge amount. It's still been find that idea, find the conviction, find the resilience,
The passion.
and go for it.
Yeah. So they don't mind waiting for several years, but are investors that patient now?
I think if we think through the shift of technologies of 10 years ago, e-commerce, retail, etc., to now the fundamental innovation happening in deep technology, in biotech, in robotics, in AI, in automation manufacturing, we have to have a longer term vision, and that's really where we're seeing a lot of the innovations starting to take roots, and that's just a longer term return, so that patience has to be there.
Where are you seeing money going? What categories are attracting more money? Is it, I'm sure it is tech.
Oh, for sure. You still, obviously, fintech, AI, but tell me a company that doesn't kind of say that they're AI today, are still really, really strong growth markets and where there's plenty of innovation. But I do think you're seeing this shift into some of the infrastructure hardware plays that we need to take that longer term view, where it's more capital intensity, but really long-term opportunity.
So the shift that we're seeing also now in how companies are growing and how artificial intelligence is playing a very fundamental role, do you think this is a generational shift or just a bubble?
I think it's generational. We've only got to see how pervasive the AI technologies can be, and I think Satya Nadella sort of said it, this is going to be as transformational as when the desktop computer arrived in the workplace. It's just the capability shift across all sectors and across all organizations. There's no doubt it will be generational. I think it's perhaps taking longer for some of the transformation than people expected, but it will be really, really fundamental.
Okay, you are in India and you are meeting Indian investors and Indian startups. How is India being seen globally? Is it a market of scale or an innovation hub?
I think perhaps some perceptions will always be the scale, 1.4 billion potential, but actually I think it's as much shifting now into this is a place of real opportunity, real innovation, a place to come and do the research, to manufacture. It's no longer just around the outsourcing. The opportunities in India are clear, I think, on the global platform to see. And it's why there's huge interest, and it's definitely why Founders Forum is back now and hopefully here for the longer term.
I can't not ask about job cuts across startups with the introduction of AI and as companies go more digital. Will this continue?
We talked about it on some of the panels that we had this morning, that there's an inevitable aspect of using AI to create the efficiency, but it is a co-pilot with humans and employees, and actually one of the fundamental shifts that we would encourage companies to do is think about their younger generation employees. Hiring 20-year-olds now, they come in with so many more AI innovation skills that are needed as companies think through their AI adoption and think through how they should build their companies longer term and their organizational culture. It's a balance between both, I think.
All right, it is Friday and it's time to take stock for all the deals from the startup world. Now, according to Venture Intelligence data, this week saw a total of 16 deals that were worth $191 million. Some of the notable ones included Dipinder Goyal's wearable startup Temple Wearables, which raised $54 million from Dharana Capital, InfoEdge, Peak 15 Partners, S.A.U Capital and others. Battery swapping operator Battery Smart, they raised $45 million from Bloom Ventures, BII, MUFG Innovation Partners, Panasonic and others. Then you had rural commerce platform Rosanna, which got more than $31 million from Bertelsmann India Investment and others. But that's not all. Home services company Pronto also backed $25 million from Gain Capital Ventures, Epic Capital and others, while D2C fashion brand Bonkers Corners got $10.5 million from India SME Investment and others. Now, according to Venture Intelligence, this year has seen a total of 191 deals worth $1.5 billion so far.
And with that, it is a wrap on this edition of Startup Street. From Ritu and me, goodbye and many thanks for watching. More news and updates coming up on the other side.